You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. Welcome back, everybody. Welcome back, good friend of mine, Hamish Hodder. How are you?
Good morning. I'm doing pretty good this morning.
Pretty good?
Yeah, I'm doing okay. I woke up feeling a little bit sick, but it is what it is. We push on.
It's podcast day.
We've got things to do today, so no stopping the podcast train today.
Yeah.
How are you doing?
Oh, I'm doing pretty well. I'm getting a bit sick and tired of constant rain in Canberra, but is what it is. It's going to be, you were saying just before, it's going to be a wet summer. That La Nina or whatever it is back once again, which in all honesty for Australia is a very good thing.
Yeah, I'm really confused by that because didn't we have one of those last year? And then I saw, or maybe we didn't, but I saw something that we've only had 18 of these events since 1903 or something like that.
Oh, really?
So it really took me by surprise because I swear we had one last year, but maybe I'm mistaken.
No, we did. We did. Yeah, I don't know. Maybe I don't know how long that the La Nina cycle is. I can't say I'm I'm a weather guru, but yeah. I'm just getting a little bit sick of rain, to be honest.
I know.
I just want some sunshine.
Just want a hot summer. Yeah. I mean, we're at the end of spring now, basically. So
yeah,
and it's not really been warm at all here in Melbourne. Yeah, a couple of days.
Yeah.
But,
Yeah. Oh well, we'll see how we go. It's like Australia, the tale of two extremes. We either get really wet and cold summer or we get summer where half the country burns down. We just need something in between.
Yeah.
Just give me something in the middle there.
Yeah. Well, you've got a lot going on at the moment. I saw your video that you posted this morning. I think that.
Yeah. I saw your comment. I saw your comment. Yeah. So new money is expanding, which is kind of exciting. So yeah, I've got an office space which is being designed, and we're going to build a couple of set spaces and a lounge space in there, which should be cool. Take the video production quality up a notch, and we're going to start to bring on some people as well, which should be cool. Just to try and essentially the goal is to just make better YouTube videos. That's really just what I'm trying to do. So I'm at the point now where things are starting to suffer because I don't have enough time to put into new stuff. Like the main channel's still doing great, but there's so much other stuff that I want to do, which I just can't because I just run out of time. So first up on the list, I'm going to try and get an editor. Maybe a writer or a social media manager as well, just for a bit of support. But it's kind of a big step, I guess. I've been doing YouTube for 4 years, and this is the time where I'm turning it into like its own fully fledged kind of business. So it's not going to be cheap. It's going to be quite difficult to kind of to get it all up and running. But yeah, if anyone wants to help out, like for those that don't know, so I run Profitful, which is my business, which kind of just funds the channel, and we're doing a huge Profitful Black Friday sale. So don't want to force anything onto anybody or anything, but if you're interested in helping me out, or maybe some of those courses take your fancy, then all of the money that we raise from doing these sales is just going to go into this expansion of the channel, which is going to be a big project, but hopefully we can kind of raise the money and get it done and take new money to the next level. So it's all happening. It's all happening, Hamish.
It is all happening. It would have been funny if in your video you were like, yeah, we're expanding. I'm getting a new video editor. I'm getting a writer maybe. And I'm also looking for a new podcast host.
Yeah, we got to get rid of this other one. Nah, in all honesty, the people that leave us feedback, they always say that if you're going to get rid of someone, it has to. I'm getting the boot. they want you, which makes sense because they do, because you know so much more about all the stuff we talk about than I do. But no, I definitely do not want a new podcast host. I'm kind of happy with the way things are at the moment.
Right.
Gee, imagine if we did that. Imagine the difference in dynamic if just one day it was just me and some other random dude.
Yeah, you can do all the callbacks that we do when we say, we'll talk about this. We'll talk about this next week.
Exactly.
And then we just never talk about it. So
I'd have to actually read the sponsor segment myself.
Yeah, exactly right. Oh, one other thing, while we're plugging things, we are near the end of Movember.
Yes.
So how's your? We're not video chatting at the moment. So how's your Mo going at the moment, Brandon?
My Mo's actually going pretty strong. It's real hard because like my facial hair is ginger, so when it's not really long, it kind of just blends in to my face a little bit. So it's not like someone with black hair where it's like super obvious. But this is the longest my Mo has ever been, ever. But it doesn't look like much from afar, but when you get up close, you can really see the filth. There's some filth in it, you know?
Yeah.
It's real dirty. Yeah. How's yours going?
Oh, very unimpressive. I can't wait to get rid of this thing. But no, it's been good to get involved. For those who are not aware, Movember is a cause raising funds for men's health and suicide prevention. And us, as well as investing with Tom and a bunch of other finance creators, made a team called Margin of Safety on Movember, and we've been raising funds. So we're getting to the last couple of days here, the last week here, I should say. So again, I'll leave that link to donate if you can. We would very much appreciate it over the next week. We'll leave that link also in the description of the YouTube video.
Yeah, for sure. All right. With that said, shall we get started? We got Tesla stuff, we got Fed stuff, Black Friday stuff, some really interesting stuff about Black Friday. And on top of that, a little bit about IPO news, art as well. Geez, this is a very diversified podcast.
We'll see how much of this we get through.
Yeah, true. I got a really cool story about McDonald's as well from a video that I saw the other day. So I'll talk about that as well. But let's get into it.
Yeah, where should we start? Oh, we got to start with the sponsor segment. Oh my goodness.
That's what we should start with.
Today's episode is sponsored by sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So basically, you can bring in all of your trades either manually or automatically by connecting your broker, and it will track all of your gains. So capital gains, dividends. If you have dividend reinvestment plans, it will do all of those calculations for you. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used at tax time to work out things such as your capital gains, dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, track up to 10 holdings for as long as you want, or you can also use that link to sign up to a premium plan and get 4 months off a yearly subscription. So go check it out if you're interested. I was recording a video, I think it was yesterday, and I had a Sharesight sponsored segment, and I recorded the video and I said the young investors link.
Oh, did you?
Instead of my own.
It's so ingrained in your brain now.
Yeah.
Saying it once a week for however many weeks.
Yeah, I'm so used to saying it on the podcast that I made that mistake. So I had to go back and fix that. But
re-record. What's your, is it just / Hamish Hodder, I guess?
Yeah, it is. Yeah. So use that one.
No, edit this out. Absolutely. / young invest. No, to be honest, you could use Hamish Hodder. You could use New Money. It really wouldn't matter.
Look, it all ends up in the same place. It all goes back into our videos or into the podcast. So
exactly. Yeah. Exactly right.
All right. Where should we?
Where should we start? I was just thinking. Do you want to do the quick IPO follow up, because we've been talking about Rivian. Yes. A little bit, well, actually quite a lot in the last little while, because it's just been so ridiculous. Yeah. But you've got a bit of an update?
Yeah. So we've spoken about Rivian, I think, now for the last couple of weeks. We spoke about the pre-IPO, and then we spoke about the IPO, their launch, and they hit a $100 billion market value. And Rivian, of course, is the electric vehicle automaker in the US that is basically pre-revenue. They've delivered about 150 vehicles. So absolute insane valuation. But what we found out this week was that the IPO took the overall IPO market to a new level. And it actually helped set a massive record for the IPO market. So in terms of what's happening overall in the US for initial public offerings, businesses going public for the first time, this year so far, there's been 981 US IPOs, and I'll put that in perspective in just a second, for a total value of those companies at IPO of $1 trillion. $1 trillion at IPO.
That's crazy.
Which-
981 or $1 trillion. Wait, yeah, value of the company. So not money raised, but value of the company.
No, yeah. So not money value, but the value of the business at the initial public offering. So at IPO.
Wow.
And just to put that in perspective, last year, 2020, the value of all of the companies was 400 billion, so less than half. 2019 was 250 billion. And if you go back a couple more years, you get to 2016, where it was just 58 billion. So in the space of 5 years, the IPO market has gone from a very small number of IPOs, which I'll talk about in a second, for about 60 billion to almost 1,000 IPOs. And we're not even at the end of the year.
Wow.
For $1 trillion worth of value, which is just insane.
Bonkers.
And there was a couple of particularly large IPOs that contributed to that $1 trillion number. The biggest was Coinbase, which IPO'd at $85 billion. Let's see where Coinbase is at the moment, actually. I have no idea.
Yeah, I don't know either.
Well, they're at 67, so...
they're falling back a bit.
That didn't go too well.
It did at the start.
Yeah, it did, right? It shot up, I think.
Did on day one.
Yeah, it went up. Yeah, and then, since then, not too great. Rivian came in at number 2 at 56 billion. So Rivian actually IPO'd at 56 billion, but of course now it's at about 100 billion. And it went over 100 billion over the last week. But, contributing to this total of 1 trillion, at IPO it was 56. And then Roblox, 45 billion. So those are some of the big kind of contributors.
Wow.
But what I actually took away from this was I noticed the 981 US IPOs, and I thought that seems really high. So I wanted to kind of go back and just look at how many IPOs there had been in previous years, just to kind of see how that compares. And this is kind of amazing. If you take 1999 and the year 2000 and combine them, so the two biggest years of the dot-com bubble, where there were just internet companies doing anything they could to go public because people were just throwing money at internet companies. If you combine 1999 and 2000, there was 915 IPOs.
Wow. Okay.
Which is kind of crazy. So this year beat both 1999 and 2000 combined.
Jeez.
So,
this is ridiculous. This is honestly crazy.
Yeah, I mean, it just
the more this goes on, the more seriously I think we should take the Young Investors podcast public. I think at this point, you'd just be silly not to.
Should we make the announcement now? So the 982nd IPO in the US market this year.
The Young Investors. Yeah. We'll probably go for a couple bill.
Yeah, at least.
We could probably get that.
At least. I mean, we've got, we've got some revenue, right?
That's true.
In fact, we've got
actually, that's true.
Technically, we've got a tiny little profit, which is more than any of these IPOs can bring to the table. So
that's a good point. We could be worth infinitely more than a lot of these companies.
Yeah, exactly right. Yeah.
Wow. Yeah, what am I doing setting my sights so low?
Yeah.
I reckon at least 100 billion valuation.
At least. You would think so, yeah.
How sad is it? Oh my gosh. If this activity in the IPO market is not a sign that the market's in this enormous, gigantic bubble, and everybody behind the curtain, everybody that's on the side or on the business side of things is doing this, I don't know what else proves that the market's the market's a massive bubble.
Yeah, and I mean we've spoken about this a couple of times, but I mean you can actually look at IPOs over time, and the number of IPOs is never an actual predictor of whether a crash is coming. But what you do see is that in the years leading up to some kind of when the market is getting overvalued, there's just more IPOs because people are not stupid. They see that there's a lot of money flowing around the markets, and they want to sell their business and sell their shares at the highest possible price. So you don't blame these companies. I mean, you don't blame Rivian, of course, for going public at such a ridiculous valuation, because it just means they have more money to invest in the business and a better chance of growing their company and becoming becoming a massive company. Yeah, so it's really smart on their part. Little bit insane though from the investor side. I will say. Yeah, definitely. But there you go. Watch. Keep track of those IPOs.
They're pretty crazy. I don't know if we got any other kind of big ones coming up. I don't really keep track of IPOs, but I'm sure there's probably a couple.
Yeah, I'm not sure actually if there's any other
companies trying to give themselves a Christmas present. Merry Christmas to us.
Yeah, I'm not sure. I'm not sure if there's any more big ones coming up. We'll have to have a look at that.
Yeah. All right. Well, that's interesting. Where should we go from here? Can I talk about this flippin' McDonald's story that I saw?
Oh yeah. So yeah. I don't know what's going on with this. Talk to me.
So this is a lot of you guys have probably already seen this. I actually just watched a video yesterday from a guy called Johnny Harris, I believe his name is. And I think I read it. Yeah, Johnny Harris on YouTube. And this is just ridiculous. This is so interesting. It was a 30-minute video about why McDonald's ice cream machines are always broken. And this sounds like some sort of conspiracy, but he's actually like absolutely hit the nail on the head with his research. He's gone so in depth with this research, and there's actually a really interesting business story behind it. So as we all know, there is the narrative that ice cream machines at McDonald's are always broken. And it turns out in the contract, McDonald's franchisees, they have to use this specific machine, the Taylor C602, to make all of their ice cream. It's in the contract. If they want to sign up and run a McDonald's, they have to use this machine.
Yeah.
It turns out that McDonald's and Taylor, these two companies, they've been buddies for just years and years and years and years and years. It's been in the contract for just absolutely flipping forever. So because this ice cream machine, the C602, is in the McDonald's franchise agreement, Taylor, the company that makes the ice cream machines, has obviously a competitive advantage there. And it turns out that they definitely abuse the absolute flipping heck out of it. So it turns out that this machine has to go through this cleaning cycle each night. It like heats up the mixture of ice cream to a really ungodly temperature to kill all the bacteria before cooling it back down, turning it back into ice cream. It's kind of gross when you think about it. But very frequently this cleaning cycle fails and it spits out some random error code. But what's interesting is they make these error codes really confusing, and the screen on these machines is tiny, so it just spits out this random like error code. And then you have to go into the manual, and pretty much everywhere in the manual, no matter the error code, it says you need to call a technician. That's just what it says, right? So you got all these employees and managers in the McDonald's, and they go in and their ice cream machine, their overnight cleaning cycle has failed. And it says, error, I don't know, 404. You go in error 404 and it says, call the technician. You need a technician out. And then obviously people get angry at McDonald's because there's no ice cream. So the manager's like, we just got to get this guy out to fix the machine. Anyway, you're only allowed to get it serviced by a Taylor technician. And it turns out that Taylor makes 25% of their total revenue from service. You can see where this is. Yeah, you can see where this is going, right? But here's where it gets really crazy. These companies have such a competitive, such a handshake agreement, such a sneaky agreement. There was a company that created a third-party add-on product. It was a company called Kitsch, and this product goes on the machine to try and prevent a lot of the common issues occurring with the machine. And it's got a good display screen, which helps to give the workers at McDonald's better insight into what's actually happening with the machine, so that they can actually just fix the problem themselves. Like one of the classic problems that the guy was talking about is that people put a little bit too much ice cream mixture into the machine, and then overnight it heats that mixture up to get it to a certain temperature. It heats it for a certain amount of time to try and get it to a certain temperature to be able to kill all the bacteria. But if you put too much product in the machine, it doesn't heat it to the right temperature, and then it chucks an error code.
Right? Yeah.
Yeah, so there's this company is trying to make this add-on product you put on the machine that tries to solve some of these issues, or just educate the people that are running the machines as to what's going wrong, so that there's less failures.
Yeah, makes sense.
Yeah, makes sense. Then McDonald's updates their policy saying these devices pose a serious safety risk to their staff and they can't be used on the machine. In fact, if they use this machine on the C602, it'll void their warranty.
The crazy thing about this story is it sounds like a ridiculous conspiracy theory, but he's just gone in and done the research and found out that this is happening. And it kind of, I mean, this is kind of what happens when a business when they have just a powerful competitive advantage, because what, of course, McDonald's does with their franchise is not just with this machine, though. They also sell all of the equipment and all of the ingredients and everything to the franchisee. So everything is coming through McDonald's. And if they have to use this machine, if they have no other choice, everything has to be standardized to what McDonald's, the company, says, then they're kind of at the mercy of this business. That's crazy. So
that's the story. That's the story. How crazy is that? McDonald's and Taylor have such a long partnership that they intentionally keep the ice cream machines terrible because it helps Taylor make a lot of money.
Wow.
And I just, obviously you just hit the nail on the head. I wanted to bring this up because it's an interesting story, because from our perspective, we always talk about companies with competitive advantages and economic moats and how it's so powerful and so important. But this is like, this is almost a tale of how moats can go sour.
Yeah.
How moats can become so powerful, or a company can become so monopolistic that it actually just makes the end experience just terrible. But there's no incentive for the company to get better or change its ways, because in fact, keeping the system broken makes it more money.
Yeah.
So
I actually have an interesting perspective on this, because I used to work at McDonald's.
Right.
So I used to work at McDonald's for a couple of years, and I always thought this was a conspiracy, because when we used to work there, of course, sometimes on hot days the ice cream machine would get empty. And you'd have to like pour in this like liquid into the machine, and it would turn it into ice cream. And it would take quite a few hours. So if you forgot to do it and someone came in, then the machine wouldn't be able to make ice cream like for multiple hours. And we would always be terrible. We would always just forget to fill the machine. So the front end always had to say, "Oh, the machine is broken." That's what people would say. So when I first, because I actually have seen this YouTube video. I saw it a long time ago. But when I first saw this, I thought, wow, this is a conspiracy. But it's kind of crazy that there is something to it it was mind blowing to me that this is actually something that goes on. And you would think that is deeply illegal, right? That has to be illegal, right? You can't make a machine that purposefully fails. I guess they can't prove that it's purposefully failing, but
but that's the thing. It's not, in a lot of cases, it's not purposefully failing. They're just not giving the workers the info. They're just chucking error codes. They're not actually telling them what's wrong with the machine. Because
basically,
it's just a bad product. Because you, as the guy notes, usually the problem was, or the reason that it chucked an error is because the workers put too much of the liquid in the machine.
Right. Okay.
So then overnight the cleaning cycle would fail, and then the next day they come in and it says error. So they try and run it again, and then because nothing's changed, they don't know what the error is. I mean, they just go, okay, it spat out an error, turn it off and on again and try it again. And because they haven't actually fixed, say, the amount of fluid that's in the machine, it's just like it just spits out the same error in another 4 hours time. It's a 4-hour cleaning cycle.
Yeah.
So, and then they get to a point where they just can't figure out what the hell's going on with this machine. They're like, call technician.
Yeah. And what's the incentive to make a better machine when the McDonald's isn't going to buy a new one, and they're probably collecting a ton of revenue from the service. Probably, they've got this ongoing revenue stream of servicing. It's kind of crazy.
It is crazy.
Amazing.
Yeah.
That is a crazy story. I remember watching that a long time ago and being just amazed by it. And I actually forgot parts of it. So I'm glad you're able to refresh my memory on that, because it's just insane.
If you guys actually want to watch this video, it's half an hour long. Just look up McDonald's ice cream machine into YouTube. It'll pop up. First result, Johnny Harris. Very, very interesting. I definitely suggest you give it a watch. But anyway, that's a little sidetrack. Not actually really news related, but something I thought was interesting to talk about.
No, it is interesting. I mean, YouTube is such a funny place because there's just such a spectrum of videos that are on there. And then, I mean, at one end you have people like this that are just making in-depth, investigations, like, cable TV level investigations into big corporations. It's fascinating. It's really well made, the video, really well made.
Yeah, very well done. All right, that's all I had to talk about with McDonald's. Stop slamming them so hard. Do you want to talk about what's going on with the Fed?
Yeah. So there's a couple of news stories out of the Federal Reserve, our favorite place to talk about. So the first thing was that Jerome Powell has been nominated for a second term. And then we've also got some news around potentially speeding up the tapering and the raising of interest rates. So Jerome Powell, who has guided the Federal Reserve and the nation's economy through the staggering and sudden COVID-19 recession by implementing unprecedented monetary stimulus, has been nominated for a second term as the chairman of the US Fed Bank. So Joe Biden has to make a nomination, and he settled on Jerome Powell for the second term. It's kind of interesting, that, isn't it? That the president decides who, and I mean, I guess who else is going to decide, but it is kind of it creates an interesting dynamic, I'm sure, because would Jerome Powell be hesitant to do things that would impact the economy until Biden has made the nomination? And now that he's made the nomination, he knows he's got the entire next term to kind of make decisions. It does make an interesting dynamic, especially when, a big part of Fed policy is going to impact what the government can do and how much stimulus they can provide. Because, I think that, what was it, a $1.75 trillion stimulus package is just gone through. The US doesn't have the money for that. They're taking on debt, and the interest rate on that debt is essentially impacted by the Federal Reserve's decisions. So creates kind of an interesting dynamic.
Jerome Powell's like, we're going to tank the economy, guys, but make sure we do it after I get renominated, okay?
The day after he gets nominated, he's like, okay, interest rates at 3%, straight up, just crank.
Going to 6, now it's 10.
Have fun, guys.
Yeah. No, that is quite funny. I was reading here, it was interesting because Jerome Powell's a Republican. So there were people that were saying, Joe Biden's just going to choose someone else. But he decided to stick with Jerome Powell, saying, let's read this. President Joe Biden said Monday afternoon he settled on Powell because the current economic circumstances present, quote, enormous potential and enormous uncertainty and require, quote, stability and independence. So there you go. A lot of people were saying that maybe Joe Biden was going to choose some Democrat person, but ended up just sticking with Jerome Powell. And now the nomination goes to the Senate, I think, for confirmation.
Right. Okay.
And then I think it's just a done deal, and he's back in for another term.
Yeah. Well, I mean, I think for what Joe Biden wants at this point, which is to be able to continue to do, the stimulus that he wants, I think Jerome Powell has kind of probably satisfied him in that way.
Yeah, you'd imagine.
I mean,
so.
Interest rates didn't go up this year. I mean, tapering is just beginning now. So it's been pretty frothy monetary policy, I think, at the moment. So that's obviously done quite well. But the other bit of news out of the Fed was that they may be tapering faster than they first planned. So we got the minutes out of the November meeting at the moment. So at the November meeting, they essentially announced that they would start to slow the bond purchases at a pace of $15 billion a month. So at the moment, they're doing, I think, $120 billion worth of bond purchases, a combination of mortgage bonds and US government bonds every single month. So they just print money, essentially, digitally, and they buy these bonds to keep interest rates low and to fill the demand gap particularly on the US government bonds, where the US government is spending a bunch of money, issuing a bunch of debt to fill that demand gap. They've been spending a lot of money. So they're going to be tapering that off at $15 billion a month. That's what they announced in November. And that would essentially end the program, end that kind of stimulus by the middle of 2022. And then at that point, I guess they can start to consider raising the federal funds rate, the interest rates. But this week we got the minutes from that meeting. And that basically showed that there's a number of Fed officials who may want to increase the tapering at a faster pace. And that kind of makes sense, I guess. I mean, inflation numbers just came in at 6.2%. It was up 1% month over month. So, if as we spoke about last week, inflation is already in a space where it's too high for the long term. So it's a matter of, is there a point at where if it gets to 8%, 9%, do we really have to pump the brakes? But also, how long are we happy for it to be, 5, 6%? Is it another 6 months? Is it another 12 months? Because we're already well outside of the 1 to 2% range, which we're pretty happy with over the long term. So, really interesting, but I guess not really surprising that there's a number of people at the Fed that think we should probably or maybe need to speed things up.
Yeah, this was coming out of the November meeting, and one of the funny quotes that I just saw in this article that I jotted down is it says here that now that this is a real thing at the December meeting, now it's a real thing at the December meeting, whether the Fed will make a decision about speeding up the tapering or whether they'll just say they talked about speeding up the taper. I thought that's just classic. It's all about, what is it? We're thinking about raising rates or something like that.
Yeah.
It's like classic. It's like, what can we say to say that we're kind of thinking about it, but we're not kind of thinking about it, so we don't spook the market?
yeah, it's crazy at the moment. But we've got we've got I guess we'll get November inflation numbers in a couple of weeks, I think, or in maybe 3 weeks or something like that. So we'll just have to. That'll be the big indicator, I think, of what's going to happen towards the end of this year. If we get another, if it's still 6% year over year. If it's higher than 6%, I would be extremely surprised. That would be insane. Look, I'll be surprised with anything because I don't know what's going to happen. But I'm just saying that if a number came in at 7 or 8%, that would kind of shock me. I think it would be making me very nervous if that came in.
Again, this is what we were talking about last week. We just don't know what that number is. Where the Fed says enough is enough. I guess that's a number that only they know. But I mean, 1970s, as we were talking about last week, better to step on inflation before it happens as opposed to trying to fix it after the fact. So but man, it's just, imagine being on that board. Imagine being Jerome Powell. That these are big decisions, Because as you said last week, you raise rates, the market's gone. It's like the market's going to react so negatively to that.
Yeah, and there would be, I'm sure they can run the numbers on how many businesses just go if they raise rates, right? Like, because there's a lot of businesses that are right on the edge of not having enough money to operate, and they've got a pile of debt that might be variable or it's short-term debt, so they have to refinance it. So they would be able to estimate, what percentage of businesses can't handle a rate increase on their business loans from 6% to 7% or something like that, right? Or whatever it is, whatever kind of loan they have, whether it's a 2-year 6% rate or whatever. So. So they'll be running those numbers, and I think it's one of those decisions where they just they'll be so reluctant to increase. They'll be so reluctant to do it because it's, what happens when they increase rates. That we know what happens, whereas we kind of don't really know what's going to happen if they leave it. Things might get back to normal. They might not. So
it's like it's like making a decision for the greater good. It's like we need to pick the lesser of two evils. Do we, if inflation's rising, do we not change rates, which helps people pay back their debts and whatever and keep, stimulate the economy, blah, 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 all that sort of good stuff. and potentially make everything, inflation keeps rising and everything gets more expensive for everybody? Or do we see that everything's getting more expensive for everybody and therefore we raise rates to choke the inflation, but in doing that, we're going to tank the market a bit and we're going to put a lot of pressure on a lot of people and businesses? So, man, you can see why if they don't have to make a decision, they probably won't make a decision, because it's a big decision. It's one of those decisions that has far-reaching consequences.
Yeah.
It affects everybody, literally everybody.
Yeah.
So it's interesting. But I think the as time goes by, more and more months of inflation data come out. We're heading closer and closer towards I don't know what you call it, towards an action point, towards what do they call it? The point at which something goes boom in either direction. Interesting.
Yeah, and I mean, with the markets acting, the markets tend to act on expectations of what's going to happen. I'm honestly quite surprised at how much the market went up over the last. I just looked at the S&P just the other day, and it was up like 8% in the last month or something crazy like that.
Yeah.
Actually, no, that's not right. It's in the up.
I wouldn't be surprised
since the start
to
of
be
October,
honest.
up 10%.
Jeez.
Which is kind of crazy.
Bonkers.
Yeah, that kind of blows my mind with the data that's coming out, but we'll see. We'll see what happens.
Jeez, it is getting interesting now. It's really heating up.
Yeah, that's for
I
sure.
wonder I don't know when the December meeting is. 14, 15 there. It says it right there. December 14th and 15th.
Okay. Yeah,
we'll
3 weeks.
see. A nice Christmas surprise. Interest rates have gone up to 4%.
Merry Christmas. We're all stuffed.
Oh, golly gee. Oh, that's funny. All right, let's move on.
Where do you want to?
We better talk about Black Friday, because by the time you're listening to this, yesterday was Black Friday. Well, if you're listening to this in the States, then I guess today is Black Friday. But interestingly, this is something I learned from this article. Black Friday in Australia, anyway, is now a bigger event than Boxing Day sales. How crazy is that?
Wow. Yeah.
I would not have picked that, and it's actually become that over the past few years, like since 2018, 2019, 2020. It's like a meteoric rise in sales on Black Friday compared to Boxing Day has stayed about the same. And last year, Black Friday actually overtook Boxing Day sales as the biggest revenue generator sale event for Australia in the Australian year.
Yeah.
Which is the Australian year is different to every other year. The year in Australia.
You know what? It doesn't really surprise me, honestly, because I think people are more inclined to spend a lot of money before Christmas, knowing that there's, all these things that, all these gifts you have to buy for people. So I think that's to me,
true.
It makes more sense that there would be a big sale event leading up into Christmas where everyone is cashed up and expecting to spend, compared to the day after Christmas where people still have cash. I mean, a lot of people give money as gifts and people are on holiday, so they want to spend. But it doesn't surprise me, I guess, that Black Friday is eventually caught up. When did Black Friday start, and who started it?
No idea. It's a US. I think it's a US sale event which coincides with Thanksgiving.
Right.
I don't. Yeah. Is it the day after Thanksgiving? I'm not quite sure actually. When's Thanksgiving? Can you look that up, Hamish?
When is Thanksgiving?
Sorry to all those Americans.
November.
25th of November, and Black Friday is the 26th. Okay. So it's the day after.
Right. Okay.
Sorry. Thanksgiving is just not a thing in Australia. I do apologize for not knowing the date of Thanksgiving.
Right. Wow. It started in 1952. Black Friday.
Did it?
Yeah. I don't think it was called Black Friday at the time, though. That's just when
I'm sure Black Friday has a meaning. I'm sure it does. I don't know. Oh, geez. Probably should have looked that up. Sorry, guys. Anyway, So yeah, back on the story anyway. Black Friday is a big deal. ANZ economists expect this year's sales to set yet another spending record. Black Friday spending last year was actually 50% higher than the year before, ANZ senior economist Adelaide Timbrell says. And that I found interesting because that's despite the lockdown and all that was happening last year, all of the hardship that we were going through. There was 50% higher spending than the year before.
That's crazy.
And they're now saying that this year is going to be even bigger. Quote, we're not expecting another 50% increase, but we do have the perfect storm of no one having traveled overseas this year, lots of household savings to draw upon, and a resilient labour market. Again, from Adelaide Timbrell. So very interesting. The Australian Retailers Association is tipping $5.4 billion to be spent over the 4-day period from Friday, November 26 to Monday, November 29.
Wow.
While there's no Thanksgiving holiday preceding the sales event, it's beginning to overshadow the traditional post-Christmas sales that local retailers have typically focused on. That's what we were talking about before. ANZ analysis of spending at non-food retailers shows Black Friday sales overtook Boxing Day for the first time last year. Yep, we said that. And it's interesting, actually, this is one interesting stat. November has now outpaced December as the biggest trading month of the year for retailers.
That's quite interesting. I guess that's being driven by the fact that Black Friday is in November. Yeah. That's crazy. Yeah, it just reminded me, actually, the Boxing Day sale makes more sense for businesses, I guess, because they have all this excess stock they just want to get rid of after people have finished spending on Christmas. So that one
got a few days before the end of the quarter.
Yeah. So that makes more sense for businesses, but I think for consumers it makes more sense to have a massive sale before Christmas. But that's very interesting. Wow.
Wowee. It's crazy. Global survey of more than 7,500 consumers by Boston Consulting Group found 82% of Australians plan to spend at Black Friday sales this year, up from 43% last year. Wow.
That's crazy.
82% of Australians plan to spend on Black Friday.
Oh.
Only 43% of Australians said that last year. That is a wow.
That is a lot.
It's a big jump.
Yeah. Are you going to be spending some money on Black Friday?
I think I will, but I think I'm just going to use it strategically to buy the stuff that I need for the new office.
Yeah, that's smart. Yeah.
Try and set up that space.
Yeah, very good.
Yeah, we'll see. Actually, I better talk to the interior designer. That's a good point. I need to talk to the interior designer about getting some of this furniture bought. Anyway, that's an issue for me to worry about. 42 minutes. What else do we have to talk about?
I can talk a little bit about art, which is everyone's interested.
Would you like to talk about art, Hamish?
I would love to talk about art.
Yes, I bought the Mona Lisa the other day.
Oh, did you?
Yes.
How much?
I wouldn't even know how much. I honestly would. Obviously, it wouldn't be for sale. I wouldn't imagine. But I have no idea what a painting like that would even go for.
Yeah, I don't know. Because this might be a dumb question, but has the Mona Lisa ever been sold?
I'm sure it was in someone's possession, and because where is it? It's at the Louvre.
Yeah, at the Louvre. Yeah.
So do they have to buy it off of the previous owner to be able to display it in the museum? Or
yeah, see, this is why I probably shouldn't be doing an art segment on the Young Investors podcast, because I don't even know. I don't even know how that works.
The Mona Lisa was assessed at $100 million valuation. Oh wow! On December 14, 1962.
Oh my god!
Taking inflation into account, the 1962 value would be around $860 million last year. So I don't think it's getting sold. But there you go. That is interesting. But no, this story isn't really about art. I think that the crux of the story is about speculation, right?
Yeah. So I mean, there's obviously been, the whole NFT and crypto movement has really, I feel like, brought a lot of life into art, especially on the digital front. Even just the success of crypto has led to a lot of people having a lot of money that they want to park into other assets. And for some people, they're parking some of that into NFTs, digital assets. And some people are obviously parking that into other kinds of assets. And art is a place that people like to store wealth as a store of wealth. So the fall or autumn, as well we would call it here in Australia, art auctions in New York just wrapped up, and there was a couple of records set. So there were 32 works of art sold for more than 20 million each, which is kind of crazy. 54 sold for more than 10 million each. So a lot of art selling for a lot of money. Which is kind of insane. A total out of there was 3 major shows: Christie's, Sotheby's, and Phillips. The total sales from this year in autumn or fall was $2.65 billion, which smashed the 2014 record of $2.59 billion, which is it's a lot of money. A lot of money.
That's crazy. Yeah, I think it's like anything, like the art space, it's a market, right? I feel like people are very cashed up at the moment. I feel, because you know how we've been talking about, if you rewind the clock, how do markets around the world get overvalued? It starts, in very healthy assets like real estate, blue chip stocks and that sort of stuff. Then they start getting overvalued. Then it goes into speculative stocks. They get overvalued. Then people have more and more money they want to invest in. They got to find, they speculate more and more. So they find things like cryptocurrency. Then that goes up a ton and they've got more and more money. Where do we park it next? NFTs, art, gold, it just everywhere. We'll just park money in all these different assets. Because just people have so much money and it just keeps flowing into new markets. Yeah.
I think Ray Dalio put it really well about how that kind of looks is what happens first is the markets are undervalued and people are looking for safe assets and getting a certain return. So it's like 8%. But eventually those assets get bid up and the return isn't 8% in those safe assets. So instead of people accepting a lower return in those same safe assets, they seek the same return in riskier assets. They chase the return. And it means you go out further and further out onto the risk curve into assets that are much more uncertain. And you get to the end and you've got assets that don't have any cash flow. So they're purely just, fundamentally speculative. Someone has to pay more for it than you did. So,
and I'm sure we've got someone out there that's saying, well, no, come on, art. I'm an art collector. My art's held value. We only call art speculative because of its non-productive nature, I guess. That's what we kind of deem to be more of a speculative investment. It's only worth what the next person is willing to pay, kind of thing.
Yeah, it's a definition, right? I mean, gold fundamentally is a speculative asset, right? There's no intrinsic value to gold, but that doesn't mean that gold just, if you buy gold today at a certain price, that you won't be able to sell it tomorrow for a very similar price. You absolutely will be able to, right? Gold really doesn't, it does move, but it really doesn't move that much, right? So it's a speculative asset. But it's got a lot of backing behind it. So yeah, you're right. It's not to say that it's there's bad investments in speculative assets. It's just that they don't have intrinsic value. But the head of the specialty segment at Bank of America, who looks into these kinds of assets, has said, the art market sentiment is sky high at the moment, and this is driven by low interest rates, stock market wealth effect, inflationary monetary policy, and new crypto wealth that needs to be parked somewhere. So pretty much everything we just described. People feel wealthier. People want to put money somewhere else. And there's monetary policy that's very, very frothy at the moment. That's just pumping money into the markets. So, that's kind of what's going on at the moment. And then speaking of crypto wealth, there was actually some NFT digital art projects on offer at this event, which is kind of cool, that NFTs are kind of getting into the traditional art space. But there was an NFT-powered sculpture by, I think it's supposed to be Mike Winkelmann, Mike Winkleman, is that right? I think I got that right.
Probably.
That sold for $29 million, which is kind of crazy. And it's actually the second highest selling NFT. And it's only second to another piece of art by the same artist, another NFT that sold for $69 million earlier in the year. I think you made a video on that NFT, right? That it was like a collage of like...
This is the guy that goes by Beeple or something,
Yes, that's it? Beeple, yeah. So, it was like a collage of like a number of art pieces or something like that.
Yeah, I think he just drew a daily art piece for like 500 days or something, and then turned it into a collage and sold it for, I think 69 million.
Yeah.
Which is just, whew. But what's funny is that guy's like, the NFT space is such a bubble. So he just took his winnings and just turned it straight into cash.
Yeah.
He converted it straight into USD.
He's done well. I mean, to have the two biggest selling NFTs, just both of them, is mind-boggling. It's also
that's the thing. Yeah. Sorry to interrupt. That's the thing. As soon as you have the NFT that sells for the highest amount, why wouldn't you? It's like, shit, I'm gonna make like 100 NFTs, because you're just gonna have that reputation as the guy that's got really expensive NFTs.
Yeah.
So I'm not surprised. Like, he could make probably 500 NFTs from here, and they'd probably all be able to sell for more than $1 million.
Yeah. Yeah,
just because of what people expect, or what previous people have paid for different pieces of art.
Perceived value.
Perceived value. That's what I'm looking for. Thank you, Hamish.
There was another funny story out of this that I just had a bit of a laugh at. There was 17,000 crypto investors who pulled their money together, and they were trying to bid on a first edition original copy of the US Constitution. So there's these 17,000 investors who thought, we've all got a bit of money. We're all quite, wealthy from crypto. Let's all pull our money together. Let's get this Constitution.
Let's buy the Constitution.
And together, the 17,000 raised $40 million. So there's some wealthy people in there. They pulled their money together. They were ready. I'm just imagining, there's like one guy who goes in with the has the money in his pocket, $40 million, and he's ready to bid.
I represent the people.
And they were unfortunately outbid at $43 million by a billionaire. But not just any billionaire. It was Ken Griffin, who was a hedge fund manager, which I thought was quite ironic, right? You have these 17,000 crypto investors, and they just got tipped by a billionaire hedge fund manager, which is kind of like the arch nemesis of
hedge fund managers, always spoiling our parties.
You almost wonder if he just bought that just to spite the crypto investors.
Yeah,
but So that was that was my first little bit of research into the art space, the
art market.
But
it's the art market.
Yeah, it's not. I'll be honest, it's not an area I'm particularly interested in on an investment basis. There's some interesting stuff going on with NFTs, I think, yeah, it's a crazy space at the moment. Very volatile. It'll be interesting to see if that market eventually calms down a bit, because at least in the traditional art space, there's some art pieces that are, they are worth a lot, but their value doesn't shift all that much. Because they've been around for such a long time, and you just don't have that in crypto at the moment, right? You have these art pieces that they've been around for a month and they're worth $200,000, and then they sell it to someone else and it sells for $600,000. So you just wonder, is that ever gonna relax? I don't know.
Do you want to focus on trying to get the Young Investors Podcast public, and I'll focus on creating some Young Investors Podcast NFTs?
Yeah.
And then I think if we can both implement, if you can do that and I can do this, then we'll be probably as rich as Elon Musk in no time, I would say.
Honestly, probably. Yeah. Honestly, if that was our main focus, we'd probably do it a lot better than right now.
Yeah. And if we really have to, then we'll just start the Young Investors coin.
Yeah.
We'll start our own crypto.
Yeah. Yip coin.
And then we'll pull the rug. Make away.
Oh boy.
Millions. Anyway. Well, Hamish, thank you very much for that marvelous update on the art space. I found that story fascinating.
You're very welcome. You're very welcome.
Thank you very much. With that said, would you like to answer some questions from the audience? Would you actually listen to a podcast with a person with that kind of voice? I don't think I could make it. I think I'd fall asleep.
Not with that kind of terrible fake accent.
I thought it was a marvelous accent. Anyway,
it's got some work.
Where should we start with Q&A?
Should we answer this?
Have we done this? Have we done this top one? We'll do the one you highlighted. That's a good one. That's a good one.
All right. So this question is, when you were making your first videos and finding your niche, what was the best way for your channel to gain traction from, say, the 50 to 200 subscriber count? As my channel is building wealth through the hustles of business and investing, I've started to focusing on investing with a weekly portfolio update to help keep me consistent while I learn to create. Would be awesome to hear your thoughts on targeting my viewers. Keep up the great work, guys.
Yeah, so I think this is a good question. It's very difficult to try and get a YouTube channel up off the ground, as every YouTuber has gone through. It's the first couple of hundred subscribers are the hardest, and then after that, it's consistently easier to gain subscribers. I would say the main thing to do if you're at a low subscriber count is to just stand back and recognize that, okay, so I don't yet have my audience. They haven't found me yet, or I haven't found them yet. And when you don't have an audience that continues to come back because they just see your video because they're subscribed, then you really are reliant on your videos being recommended to people randomly on the YouTube recommended page or through search or at the end of videos on the sidebar of videos. So you really just have to focus on your titles and your thumbnails. Again, you don't want to, I say this all the time, but you don't want to clickbait people. You don't want to lie about what you're talking about, but you do want to really focus. Like I follow a couple of channels that are about kind of creators, and they're all saying just focus so hard on your thumbnails and your titles. It's really important, and just try and make your videos about just really interesting stuff that stands out. Maybe people aren't talking about it. For example, when I started my channel, there were very few people talking about, at the time, I was just talking about purely Australian stuff back then. And there were very few people talking about it. So because there's kind of like, I want someone else, I don't want to listen to you, Brandon. Well, you got no other choice. So I would kind of just say try and do something unique, I guess.
Yeah, that's good. I think the first thing is you've just got to be really patient. I think I probably got like 9 subscribers in the first month or something, and I posted like 10 videos. So you've got to be extremely patient and recognize that it's especially at the start, it's a bit of a grind. I would say between the 50 and 200 subscriber count, I think doing collaborations helped a lot. So finding similar sized creators and basically sharing audiences, doing videos together, that seemed to be quite a considerable helper for me, particularly even up to the 1,000 subscriber mark. I did a lot of like SEO, so trying to rank for good search terms. I'm not sure if that would work as well anymore, just because when we were both starting out, there was basically no content in finance, especially for Australians. So we could make videos and it would be relatively easy to rank really high on the search term for really popular search terms. I don't know if that would be more difficult now, but that I would probably still try and do that with different search terms. And then I think just engage with your audience as much as possible, because one of the advantages, or one of the things that, one of the advantages that you have of having a small channel is that you can engage with every single person who comments on your videos, and that has has significant value to subscribers, and that's something you just naturally lose as your audience gets bigger, because it's impossible to answer questions all the time, right? And answer every single comment. So taking advantage of the things that are an advantage when you're small like that, I think would be my piece of advice.
Here's an interesting thing. I'll also say one more thing is try and make whatever you do. If you really want to get up to speed as quickly as possible, you have to pick a topic and make your content the best video on the internet about that topic. I've seen a lot of people's channels get launched on the back of one particular issue. The most recent one I'm thinking of is Patrick Boyle, I think his name is. He went deep on the Evergrande crisis. He was first on YouTube to talk about it. He went super deep. He understood it inside and out, and he made really good videos about that crisis. And he got traction because his videos were the best on the internet about Evergrande. For example, I implemented the same strategy. Actually, my mum has a YouTube channel of all people talking about chemistry, and she's very good at doing titrations. She teaches titration and she coaches titration teams. I didn't realize titration is there's competitions for titration. So I went into a lab and I took all of my camera equipment and we made the best, most complete redox titration video on the internet. It's a step-by-step. It's like 40 minutes long. It's well-produced. It's super clear. You can see everything. And we took a lot of time and put that together. And those videos got like tens of thousands of views. And they were her first videos.
That's crazy.
So, yeah, I think there's something to be said about trying to make your videos the best on the internet at a particular topic. That's one strategy that I've found works very well. But yeah.
Awesome.
All right, should we wow, that's an hour. Sorry, we did go in depth on that. Should we wrap it up there?
Yeah, let's wrap it up there. It's a really interesting question. It's good to get I think questions like that every now and then. I like answering questions about that because we don't really get to answer YouTube kind of related questions very often, but
yeah, it's true actually.
Thanks everyone for tuning in. As always, I hope you guys enjoyed your weekly dose of the Young Investors podcast.
Your weekly hit.
Your weekly hit.
Oh, feels good.
You can relax now, okay? Thanks to Sharesight for sponsoring this week. Head over to sharesight.com/young investors to sign up for free or get 4 months off a yearly subscription. Thanks, Brandon, for joining me, as always.
All good.
We'll have to link up for a live podcast relatively soon, now that we're free to move around the country a little bit. A little bit of freedom, I think.
Soon.
Very
within
soon.
a couple of weeks, hopefully.
Very good. Thanks, everyone, and we'll see you guys next week.
See ya.